Chart patterns. Ascending triangles trading strategy. Overview. We've learned how to identify ascending triangles and how to break them down. We'll see now how to trade them. The entry point is going to be the highest point of that formation. Where we've drawn the pattern, we have a couple of swing highs. The highest of them in that area is going to be the entry point. The stop loss is going to be the latest swing low. Remember, these patterns are a bit spiky. They fail sometimes, as they all do, but ascending triangles are a very good indication of the near-term trend of a market. Detailed strategy. Triangles are valuable patterns for any form of trend trading. That means trading continuation of a strong trend. You can also use the appearance of a triangle and triangle groups to either increase or reduce your position. When trading an upward trend, you can add to your long position on the appearance of a strong ascending triangle. Likewise, you can add to your short position when a descending triangle appears in a downtrend. The basic trade strategy is buy on ascending triangle, sell on descending triangle. Remember, the depth of the triangle is the range of the market's price during the time the pattern was forming. The depth is a useful measure of volatility because it's not averaged and is recent. You can use this as a rule of thumb for setting your take profit and stop loss of your trade. You can trade triangle events as a single order trade or as a grid. For the stop loss, it's a good idea to have a margin at least below the bottom range of the triangle, so the take profit should be a similar size. AUD to USD example. Let's say a triangle on AUD to USD has a depth of 90 pips. As you can see in the example, the trade would then be. This gives a 90 pip leeway above and below the open level. You can set this to be more or less aggressive according to your risk levels. Using triangles to forecast a trend change. You can also use triangle formations as an early predictor of trend change or trend weakening. Here you can see a sequence of triangles that tell the story of a changing trend. The first pattern is a steep descending triangle that is followed by a large symmetrical triangle as the trend bottom nears. Notice that the depth of the symmetric triangle is much greater than the two either side of it. This is common because volatility usually widens as the market approaches a trend bottom or trend top. At the time the symmetrical triangle appears, the long moving average line is still pointing towards continuation of the downward trend, though with some slowing. Finally, a new ascending triangle appears in the direction of the upward move. This confirms that the trend has undeniably reversed. This would be the least risky time to go long. How to tell a reversal triangle from a continuation triangle. The most common case is for an ascending triangle to appear in uptrend and a descending triangle to appear in downtrend. But this rule doesn't always hold. Triangles can also appear in the other way around. These are atypical or reverse cases. The atypical case. An atypical triangle is in reverse, meaning a descending triangle in an uptrend or an ascending triangle in a downtrend. Atypical triangles mark places where the price attempted a reversal but failed to carry through. You can use atypical cases to predict reversals in trend, as you can see in this example. Symmetrical formations signaling trend tops or bottoms. A symmetrical triangle marks a consolidation period where the market isn't driving in any preferred direction. The bulls and bears are evenly matched. Data shows these chart patterns to have slightly better than even odds at predicting a continuation. They often form near or exactly at a trend top or trend bottom. This is why it's important to take note of them when they appear. Unlike averaging filters, a triangle pattern can capture a great deal of information on the state of the market during that interval. The symmetric triangle formation can be a sign of a couple of things. The market has reached the volatile period at the top or bottom of the trend. The trend is weakening and is pending a reversal. At that instant, bulls can't push higher and bears can't push lower. The trend is consolidating, but there could be a brief leg in the opposite direction. A symmetric triangle on its own isn't a reversal signal. However, if you see one in a trending market, look to see if the trend is already overextended. Look for signs that the market is overbought or oversold, including approaching key support or resistances, overbought or oversold state in one or more oscillators. Look for an extended leg without any correction. If a strong symmetric triangle appears in an uptrend, it's best to reduce long positions. Likewise, in a downtrend, it's best to reduce short positions. That is, treat the symmetric triangle as a potential for the trend to reverse. Reversal of downtrend. Take a look at this example. Here we have an ascending triangle appearing in a downtrend. It's an atypical case being the wrong way round. This is followed by a strong descending triangle and then a symmetric one as the trend bottoms out. The first ascending triangle represents a failed upward breakout. The trend didn't reverse at this point and turns downwards again for a short period. However, the break shows that bullish strength is building at this point. The symmetric triangle shortly afterwards means that the trend has probably bottomed out, and this would be a good point to go long. It's best not to enter on a single reversal triangle. It's better to wait for other confirming signals that the trend is indeed flipping direction. In this example, it was the symmetric triangle and the market already being in a deeply oversold state. Reversal of uptrend. In this example, a reversal triangle hints at the end of an uptrend. This example shows a similar development. The descending pattern forms as an uptrend is nearing exhaustion. Again, this atypical triangle is a failed downside breakout attempt where bears are gaining strength but not enough to control direction. Shortly afterwards, a big symmetric triangle forms on high volatility. This is a strong clue that the current uptrend is nearing completion. A short position placed immediately after the pattern would capture the large downside break just afterwards. This marks the end of this trading series. Remember to always practice what you've learned and never invest more than you can afford to lose. Trade well.